We're going to the business news early tonight. Ahead of that announcement from the Prime Minister, our business editor Giles Beckford joins us from Wellington. Giles, there is a rebound in the manufacturing sector, the best in 2 years, but what, it's about to hit the skids again?
Well, I would think so, Lisa. Good evening to you. I realise we just do a brief report this evening. It's the best survey for it's called the PMI, Performance of Manufacturing Index, and it's the best since April 2018, with new orders driving the rise and production of goods at a 14-year high. All, of course, just reflecting the pent-up demand that there was in the economy as people got back to work and more normal activity. The survey did show, however, firms still shedding jobs, and that would be a worrisome aspect to that. Clearly not enough substance in either the recovery or in the people who run the businesses in their own thinking that they can sustain or keep staff or, in fact, hire staff. So from that point of view, you have to say that's a bit on the downside. One would think that, of course, with the developments of the past few days and with whatever we hear from the Prime Minister in the next few minutes, that will put paid to that rebound in activity for the time being. There's a companion survey coming out on Monday which covers the services sector. They are two of the best spot real-time indicators of how the economy is faring. If they look good, then there's a suggestion that there's a reasonable amount of activity underpinning growth. If they look bad, then it's always a harbinger that things are going to get tighter for the economy. We would expect a similar outcome for the services sector, a rebound, but the reality has to be that, of course, as we move to more restrictions, even if it is just confined to the Auckland region or thereabouts, that is going to knock the stuffing out of things. The best estimates are that the move to level 3 alert is costing the economy somewhere between $300 and $400 million a week. And so you can see that any further restrictions on nationwide activity, for instance, putting the whole country into level 3, is going to be that much harder. It seems almost inevitable that, of course, the government will have to dip into its $14 billion COVID fund that it hasn't spent yet.
Giles, I'm keeping a side eye on the podium at Parliament to see if the Prime Minister is on her way. But in the meantime, could you give us a quick gallop around the market numbers?
Share market never got out of bed this morning. Caution about, of course, the virus. Sitting on the sidelines ahead of company earnings reports, which come out next week in earnest. Top 50 down 49 points, just under 0.5%, 11,450. Currency 65.3 US cents, 91.4 Australian, just touching 50 British pence. And since you seemed to balk at buying gold yesterday at $1,950, perhaps an ounce of silver at 27 US dollars might be a little bit more palatable.
That does sound a bit more palatable. Thank you, Giles. That is Giles Beckford, our business editor, with today's business news.